As a swing trader, I'm primarily interested in moves of 8 to 40% plus magnitude in a very short period of time. Like I'm looking for a move of 8% in 3 to 5 days, or 40% in 3 to 5 days, or a $5 to $20 move in 3 to 5 days. So that's really the crux of the method which I trade. And in order to understand that, or in order to do a better job of trading 8% moves or swing trading, you need to understand how the market operates or how the stock operates on your chosen time frame. If your chosen time frame, or if your chosen method or setup is to find a stock which doubles, then every day study stock which double, and then based on the understanding of what works on a stock which has doubled, you scan for those kind of stocks, or you select those kind of stocks before they make that kind of a move. And the other reason for doing this, and this is very important if you're a new trader starting out in the market, I've been doing this for many years, is basically there's a lot of information and misinformation in the market. Like if you go and look up on Stockbee's Twitter or on blogs or anywhere or in books on trading, there's a lot of information, and it is passed on as if that is the truth. Like you will hear, don't buy stocks which are going down, or you'll hear that don't buy, you should only trade stocks about $20, or like they will tell you, only buy stocks within 5% or 10% of 52-week high, and you can take that as a gospel truth and start believing, and then you will be spending years doing things which don't really are true. So it's very important for any trader to have a self-developed understanding of the market, or the self-developed understanding of the setup. The setups will work for you if you have a very in-depth understanding of the kind of moves which happen on the time frame on which you trade. And that's why, just by knowing about something, you read a book by a market wizard, or you read a book by someone who's made $1 million, you're not going to make $1 million because you don't have the in-depth understanding, or you not spend time. So it's very easy to do this on your own, and this is a very, very simple way of doing it on a daily basis. And if you do it on a daily basis, you will start gaining insight into the moves, you'll start gaining insight into the market, you'll start gaining your own understanding of what works and what doesn't work, and then you will start tweaking your methods to see what works and what doesn't work, and you will not be you'll not fall prey to false information or waste your time. The problem with the false information, a lot of these things which are bandied about, you should only focus on stocks with IBD says you should only focus on stocks with IBD rating of 85 plus, or earnings should be about 25% or 30% or 40%. And they say that based on their model of like 500 stocks which they have studied, they found that to be the true. And I can show you on real data for last 10 years that that's bullshit. Okay. The reality is that the stocks, the top 500 stocks which make a move, they don't have earnings, or they don't necessarily have earnings. In fact, the best moving stocks in the market, the best performing stock in the market, will have very little to do with fundamentals. The most of the time, the stocks which will make big moves, like say, here is a stock which has made a big move. Okay, this stock has gone up 500%. Okay. And if you look at its earnings and all, it has there is no earnings. There is like an EPS ratings will be in single digits. So if you get carried away by some of the things without questioning, this is the fundamental principles, whether this is of in trading or anything which you do in life, is question everything. Question everything, and question it with the intention of making money, question it with the intention of developing your own methodology, question it with the intention of fine-tuning your method, and don't take anything which anyone says, even me, for granted. Question everything. Okay, this is the stock which has done 500% move, and if you look at like if I go to MarketSmith and look at its this thing, you will see that it has nothing like I'm trying to get into MarketSmith to show you people. Now EPS rating is 8 for this stock. Okay, 1% sales percent growth, negative earnings growth. It has been making losses, and it will continue to make losses for next couple of years. So why did this stock make a move? Now if you go and just scan blindly based on some of the criterias which like people say look, and this is not the only stock which is like this, like, and if you look at the stocks which have made the biggest move for the year, you can prove a hypothesis as true or false. This is like the fundamental thing which you need to learn as a scientific way of doing things. I just sorted this list by YTD, and if you look at stocks here, okay, is one of the biggest moving stocks. It has again made 770% move. Okay, and if you look at here, okay, its IBD rating is 65. Okay, in last quarter it made this 121 and 186, but that came in here, and the stock hardly moved anything after that. The stock was already moving in anticipation of that earnings. So look at the information and then question whether things which people say are true or false. Okay, Tandem, this is Tandem Diabetes, EPS rating is 48. Okay, it's negative, it's making losses, it's making gigantic losses, like 25 cents per share loss to $12. It might at some stage get profitable, but stocks move not based on fundamentals alone. Stock move based on speculative interest, stocks move based on momentum, stocks move based on sentiment, stock move based on in anticipation of move. So there are many factors. So you see, this is the third or fourth largest. I know every stock, the top 100 which have made a big move, and I study this and not just for fun, for making money. And I can tell you, if you look at all these stocks, none of these stocks have the kind of characteristic which IBD says are there in the top 500. The EPS rating is 6. So if you scan based on an IBD criteria, you will miss all these stocks. You will miss all these stocks. And then when you say something like this, there is always this thing, oh, these are all junk stocks. Yeah, these are all junk stocks. So stocks which are making moves of 700, 800% are junk stocks, or they are not an institutional quality, whatever that shit means. Okay, they're just a justification for poor analysis, or just blind beliefs, because it's look, this is the $1 trillion coin in the world. Look, if you can make people believe, they'll willingly go and do. Religion is based on that coin, right? And you put a belief in person's mind, he leaves everything, goes into a church on Sunday, wears a suit and starts believing anything. Same way he goes into a temple or he goes into a synagogue based on beliefs. And same way people do a lot of trading based on beliefs which are not necessarily true. So your important task, if you want to be successful in this game, is to have only the right kind of belief. Because if your beliefs are right, you'll find the right kind of stocks. If your belief and your effort is not focused, you'll find the wrong kind of stocks. So start looking at that, and then if you do this study, you will be incrementally developing your understanding of the market. So what is this study? And I've written about this multiple times. I always and I post the post on the members blog talking about the daily exercise can improve your trading, and I make this post multiple times, and I have said this multiple times. Look, this is the thing which I do first thing in the morning, every day morning. I do this kind of a study, even though I know what works and what doesn't work. For the simple reason that you find incrementally something and it strikes your mind. You find something in recent times, recent months, I developed found something in these studies on the short side, which has helped me a lot in terms of fine-tuning a short method, in terms of the weak structure which I talked about. If you're looking for a short, you need to look at a weak structure, and that is something which you will find if you study something like this. So let's have a look at today at the 8% moves and what you can study. Obviously, if you're a newcomer, it's going to take a lot of time to do this, and you might need 1 hour to do this. Somebody like me just scrolls this, through these stocks. I've been doing this for years now, almost 10 years. So I know what I'm looking for. See, so the scan for this is very simple. I look at ADR, I look at US common stock. You can look at ETF, it doesn't matter. You can study this in any market. You can take the European market, you can take the uh, Korean market, Chinese market, or Indian market, or Bulgarian market, or whatever market. It's not going to be very different, except for the fact that you'll have to adjust for the liquidity condition, which is basically minimum V 3.1 is 100,000. There is actually duplication of that condition in this scan also. So what I am really studying, or what I am looking for every day, is stocks which are up 8% plus in 5 days. Okay, I'm interested in an explosive part of a move. I'm not interested in a longer term move for this study. I do a separate study for those kind of moves, but here I'm interested in a very explosive part of the move. The kind of trade which I'm interested in is where I can make 8 to 10% in 2 or 3 days, sometimes 1 day, and or a stock which goes up $5 plus in 5 days. So high price stocks, you can't really look at them from a 8% perspective. They make moves in increments of $5 to $50, $100, and you want to capture a move of $5 to $20 or $30, $40 in 5 days, because that is again an explosive part of the move, because you can risk $3 and make $10 or $20 or $30. So that's the kind of moves. And I look at stocks above 5. You can study stocks below 5 also. In fact, and stocks below 5 tend to make bigger moves than stocks priced higher. So if you run the scan, you find 111 stocks. Now what I do is, like for this study, is I always scan, sort this by a 5-day percent change, which basically is C by C5. So that way you can see, look at which stock has made the biggest move in last 5 days and study it basically. Now you have like, let's start by Xerium. This is a buyout, it's gone flat, like, so there is nothing much to look at it. Now you have INNT, which is like, which has made a move of 55% in last 5 days. So here from this particular 1, 2, 3, 4, 5. So if you look at from this day to this day, it's like up around 55%, or from here to here, it's around 55% or something. Okay, so let's look at like what is it that if you're completely newcomer, you'll like need to spend some time trying to understand. But see, at a very fundamental level, the basic setup idea, which has made millions of dollars for me, cumulatively more than like 10-20 million, is basically a very simple idea, which is that basic stocks move in momentum burst. So how does you know that there is a momentum burst? Here the stock had a 4% breakout. After that 4% breakout, it made a 69% move, okay, or whatever percent move after that. That's the kind of setup which you're looking for. So what is the understanding from this? Look, what do you need to focus on a daily basis? All these stocks will show up, or most of the stocks, unless they are high priced, will show up in a 4% scan. So if I do a damn good job of focusing on 4% scan, you will find moves. Like the market was falling, people were telling like, look, don't get invested, be in cash, cash is a position, this, that and all. And here is the setup which I found, and the stock, and I bought it, and the stock went up 10.69% in a day. That's the kind of setup which we are working on. And how do you find setups like that? By studying past setups like that. So that's the thing. Look, if you focus on stocks with 4% breakout, you're likely to get these kind of moves, because as you see more and more, see, this stock made a big move. Again, where did it show up? In your 4% scan. And why does it show up? Because when a stock makes a move, it starts with a momentum burst basically. Again, another stock which made a big move. Where does it show up? This is 4% breakout. Okay, if you see here in this indicator, this is a 4% breakout indicator. Okay, or like look at CCRC. Now there is a stock which is like, see, any move in a stock is likely to start with a 4% breakout. Okay, this is a big move. The stock made a big move. Okay, so if you do a very good job, if you forget everything else, whatever noise is there in the market, forget everything what people are telling you, and just focus on one scan and just buy based on 4% breakout, you will catch many of these moves. You will not catch all of them, but you will catch many of them. Yeah, ZN, what happened in this particular case? Again, like stock had a 4% breakout here, okay, and stock has gone up. Okay, Now you have NTRA again. Like, what do you see here? Like, and this is what kicked off from a sideways move. This is what kicked off the move. There was another 4% breakout, but that was like in a second day after a breakout. Now this is how, by studying these kind of moves, I started developing the low threshold breakout, and something like this doesn't show up in your 4% scan because it was up 3.38, but that was a nice setup. So the low threshold breakout scan will catch it, or it will even catch this kind of moves. Now again, stock has made a move, and see, it's always, what is the difference between something like this, okay, which was going down and it reversed. But even if you see what something which going down, like, and I see a lot of people buying like in stocks which are down a lot, I see no proof in my study of 8% breakouts that something which is like down like this is going to make a vertical move like this. It can happen, never say never, but more likely what is likely to happen is you are going to have a transition period, and from the transition period the stock is going to make a move. What does it mean is that, look, if a stock was going down, it is going to be more likely transition out, or the momentum, like this example, the momentum started slowing down and then there was a reversal. That is a better setup than just buying a reversal, unless you're like looking for just 1 or 2 days kind of a move, and you'll find that again and again in this kind of examples. Okay, now once you study this, let's go through all 111 of these, and I will give you some of my understanding of this. You will discover that also. Look, and a lot of these stocks which will make this move will already have an established momentum. It's better to take a stock with an established momentum than to it's better to bet on a proven horse, like in this stock had an established momentum, and we define established momentum by TI65 being above 1.05. Or for those of you who don't understand, if this is green, then the stock is in a momentum phase. Okay, versus like in a stock which is not. Here again, the stock accelerated after it established momentum. You can get chopped out a lot if you just like in a trade in a non-momentum kind of a time zone period. Like here, you got chopped out, but once it established a momentum, you could figure out whether it has linearity or not. Here there was no linearity. Once it starts establishing momentum, you can qualify that momentum as a momentum which has like linearity, it's orderly, it's not giving back gains, and then select setup. So adding a momentum filter is going to improve your trading, like here, like, and it's random moves. So something like this I'm not going to be spending time on, and all these criterias, 3 Lynch, which I say which I use for selecting breakouts, has come from this. Like you can see, this stock meets all your criteria of 3 Lynch. Why? Because it's very linear, and the more linear the setup you select, okay, more likely that it is going to work, or the probability of the setup working is going to be higher. Now here, like, and you'll see that the stock pulled back and then like, and it made a move, but again 4% breakout. So if you just need to focus on one thing, you can focus on one, which is 4% breakout. Again, like, and I see this kicked off the move, and again, like, and a stock going down, you can buy, hoping that something like this will happen. More likely that there will be a transition pattern. And what is the transition pattern? The stock is down here and it transitions into a positive move after forming some sort of a transition. It transitions from a bearish trend into a bullish trend after putting in some time, basically, is what I'm saying. And the V reversal, true V reversals are very rare if you study the 8% moves. So CCX, again, what do you need to do? Focus on 4% breakout. This is what kicked off this method thing. This is again like 4% breakout. So if I just do nothing but just like focus on 4% breakout, I'll be able to find many of these setups. Okay, see here, what's kicked off this from this transitional thing. See here again, this was a good buy point on this stock. It will not show up in 4% breakout, but it will show up in which scan? It will show up in your low threshold breakout scan, because it has momentum. And see how when a stock has orderliness, linearity, it is much easier to trade than to trade something which doesn't have momentum. Okay, then you have Vesco. Now this is something which gaps up. Like most of the time nowadays, I don't even get into things immediately if it gaps up a lot, because based on these studies, I see that gaps, it's much better to wait. Sometimes the gap will follow through immediately. There are breakaway kind of gaps, but most of the time it's much easier to just stay away from gaps. If you study this chart also, again, like, and if you just focus on 4% breakout, okay, that's where the move started. The moves don't start in the middle of the night when nobody is paying attention. These swings are 28%, 30%. Okay, this is a large stock. Float is 385 million. So it doesn't move as fast as some of the other stocks. Pace. Now, this is what our definition of 3 Lynch is. Where does the 3 Lynch definition come in? The 3 Lynch basically, and for those of you who don't know what 3 Lynch is, 3 Lynch is basically the criteria which are to be used for so if you search, where is the search box in this now? You should be able to find the okay. So let's look at 3 Lynch so that you know what we are talking about and there is a context to the discussion. So what to look for in a good 4% breakout? 3 Lynch. This is 3, not up 3 days in a row. Linearity of prior move. What does it mean? Here, linearity of the prior move. This is like was very linear. Linear means like it didn't give up any of the gains. It was just like buyers kept on coming. Right? It had very little pullback, like hardly any pullback, sideways move. That is linearity of the first leg of the move. And here you're looking at this, it's not up 3 days in a row. Okay, so not up 3 days in a row. Linearity of prior move. So is this linear? Yes, it was linear. Okay, then what else? Young trend, 1 to 3rd breakout from consolidation is low risk. So was this a young breakout? Yes, it was a young breakout because the trend had just started. This is the first breakout. And it worked, and like this is the second breakout. As you go down the trend and it starts making more and more breakouts, after 3rd or 4th time it is less likely to work. So young trend, 1 or 3rd breakout from consolidation is low risk. No more than 4% breakdown in a consolidation. So if you look at it, there is no 4% breakdown in a consolidation. Then it started having breakdowns, and once it started having breakdown, none of these setups were good setups. And they didn't work as good as if the 3 Lynch criteria were satisfied. And consolidation pullback is shallow, orderly and compact with narrow range bars and low volume. So if you see here, it's like series of narrow range bars, low volume. That's the best setup. So if you can and if you know these things and close near high of the day, this stock did close near the high of the day on that particular day of breakout. Okay, it doesn't have to close exactly at high, but like within 20% of the high is good enough. So if you know these criteria are coming from studying these 8% moves. They are not something which I just invented, or I went on the top of the mountain and somebody gave me on a stone. No, they are just based on studying thousands of moves, or more than 10,000, 15,000 moves like this of past, and you can do this yourself. None of the things which I do is there is no secret sauce. There is nothing, no magical things about it. It's just plain old hard things. So here again the stock has gone up here but this is choppy, right? And here it didn't meet any of your 3 Lynch criteria. Okay, the stock went up, but that's not the kind of setup which you want to be focusing on. But the most important thing, even if you look at something like this, is that the principle of range expansion. Moves start with a range expansion. Here the stock was having a consolidation, and this was a positive range expansion in the sense the stock was up 3.57%. For the last 8 or 9 days, the highest move in that stock was around 2% on the downside or 5% on the downside. But the positive moves, if you look at during this time period, was not more than this percent move. So if you just scan for range expansion, most of the time you will find good swing trade candidate. This is a range expansion, right? 4% breakout, and the stock made a move of 21% in 4 to 5, 6 days. Okay, so when you are faced with the choice of what to scan for a range expansion. I scan for a range expansion of 4%. You can scan for a range expansion of 3%, or you can scan for a range expansion different way, which might be that you look at today's price percent change is greater than the last 5 days price percent change. That is also going to work, or today's price percent change is greater than last 10 days price percent change, each of the last 10 days price percent changes, that has to be like that. Okay, it should work. Like here 4% breakout and the stock made a move up around 12%. See, these are like they look small moves, but this is like in 2 days or 3 days it's 8%. And if you can find hundreds of trades like this of 8%, and if you risk sufficient enough, you will find there's money in this. Okay, so this is a setup where again, like you will see that look, and there's the first leg of not very orderly, but like here the series of narrow range days. So does it meet 3 Lynch criteria? But it will not show up in your scan because the volume condition was not met. But that is why the low threshold breakout scan will still catch this stock. Okay, so now if you are looking at these, what you'll find is as you go down is that you'll find higher price stocks after some time. Okay, helix. Now this is choppy. Now I try and avoid these kind of setups. So do they work? Sometimes they can work, but we have a choice based on studies. You'll see that this is more orderly, right? This makes a move, goes sideways, but very orderly manner, and then there is a 4% breakout. But this will show up in your low threshold breakout scan. Here is a 4% breakout, and from that it makes 18% move. Wouldn't you want to be in this kind of moves every day rather than sitting in something which is like going down and you buy and like hope that it will go up, or like say again here like there is a 4% move, but like this is not a kind of setup which I would take for the reason didn't close near the high. The context of the setup didn't really meet the 3 Lynch condition. It was in a negative period. Sorrento. Now here you have PKE. Again, how did this move start? It started with a range expansion. Obviously we don't scan for a very low range expansion of 2%, but here, and even from this 4% breakout, it went and made 10% move in 3 days. Here now it's setting up very nicely as a setup, right? And here it will show up in your, it will not show up because it had only 72,000 volume. We scan for minimum liquidity, otherwise it would have shown up in your low threshold breakout. Wow, so see here like it had a 4% breakout. This was a nice setup, but like because of the market volatility it went down, or there might be a earnings due or whatever might be the reason, but still setup made a move. But that's not the kind of setup which you want to focus on. Now here is a move from IPO. Again, always look for a setup based on the studies. I am not saying based on some random thing. Look for a setup where it is not up 3 days in a row. The probability is much higher, and also something like this series of narrow range days. Anything which breaks out from a series of narrow range days has a potential to make at least next 3 to 5 days move, because volatility compression, this is volatility compression on 3 days, leads to, and volatility expands. So that's a very nice move, and this is like in 2 days the stock has made 16%, 17% move. Okay. CRC, now this is a stock which like this is where the thing which I said, look at a young trend, look at this is the first breakout, or this is the first breakout, then like it became choppy, and then like now this is the latest breakout, but like things are becoming more and more choppy. So third time is it can still work, but it gets extended, you should avoid. SRG, now again like say here there was a 4% breakout. Why wouldn't you take this? Because it didn't close near the high, but still stock ended up making a move. So ABUS, again, like if you study a move like this, here you wouldn't take it like if you're looking at it at the end of the day. If you took it during the day, it met your criteria of 3 Lynch. This 3 Lynch is something which you should know very well if you want to trade my kind of setups. 4% and dollar bracket. I don't need to remember this. I wrote these rules. Okay, so you need to remember this and you need to internalize them, because this is foreign to you. Okay, I created this method because I know these things. Okay, I don't need to refer to this. But if you are trying to make money using my setups, you need to like probably print out a flashcard and keep and check every setup, every 4% breakout against that. Does this meet 3 Lynch criteria? Yes. Not up 3 days in a row on this particular day. It didn't meet the last criteria, which is high, and these criteria are also in order. Okay, if all these criteria are met, close near high is something which like, and sometimes is you enter this like, and if you enter this at around 10 o'clock in the morning, the stock would still be near high of the day, but at the end of the day it might not end up there. That's the thing. But out of all these criteria, the one which you can give a little bit room is the last one, which is H, close near high of the day. The stocks which doesn't necessarily close near the high of the day can still go and make a move if rest of the criteria are good. But there is always more choice than you can like and buy, so you don't need to really take that. Now here is like, and I see this is what people want to trade, which is like, okay, there is a drop and then the stock turns and make a V-turn. Sometimes it works, but like in all the 8% breakouts we've been looking at, how many examples can you find like that? My thing is, look, do I want to focus on a low hanging fruit, or do I want to focus on something which is like a more rare kind of a thing? Yes, the stock did make, and it will still showed up 4% breakout here on this day, and stock did make a move of 12%, but there was also a transition pattern, like the stock's momentum had come to a halt, and then there was a transition pattern. But that's not a setup which I really want to focus on, or not something, not because I don't want to focus on, like there are people who make money doing this, but like I don't want to focus on, because I don't just by studying this 8% moves over many years, I don't see preponderance of these setups on a daily basis. They rarely happen. They happen only during certain time frames, or they happen on some stocks, but that's not a setup which is very common. You can find 200 setups for every one setup like this, the kinds which we looked up earlier. So you have to take a choice, and yes, you can make a money buying something which is going down a lot, but easier money is in buying something which is already going up. Okay. Now here again, like a stock made a move, and that's the another thing. You look, and when a stock makes a move, and next day it makes a 9 or 10% move, like this is a 4% breakout, and next day it makes around 10-12%. Now this is where the thing comes in. You look, and should I be exiting, or should I be moving stock, or should I like give up some of the sell 75% and hold remaining? It's always like, if you're looking for a momentum burst kind of moves, once you study hundreds and thousands of them, you'll realize that it is much better to take a 10% gain if you get it in one day, and then move the stop on rest of the position. Now this is an ideal example. It's not very, I think it's a thinly traded stock, I can see from the way the stock looks, but like see here, 4% breakout, and the stock is up around 9 or 10%. Did it meet all your 3 Lynch conditions? Not up 3 days in a row. Okay, not up 3 days in a row before the breakout. Okay. Linearity of prior move, was this a linear move? Yes, there was this couple of big candles, but like, and it was overall a very linear move. Then young trend, okay, that's a little bit a question mark, but it had a consolidation of 1 or 2 months, so you can like reset the trend as young after that. No more than 4% breakdown in consolidation. You had no 4% breakdown in consolidation. This was a 4 days consolidation. There was no 4% breakdown in that. Okay. Consolidation pullback is shallow, orderly and compact with narrow range bars and low volume. Let's see if that was the case. The volume was low here. See, the volume was very low. They were like 0.42%, 0.42%. This was like down 84%. This was like 0.42%. So this is just like the stock was making less than 1% move before this breakout, and it had a breakout. And did it close near the high? Yes, it closed near the high. All criteria were met. If you just focus on stocks which meet all these criteria, okay, you will make money. Okay, you just have to run one scan and like focus on the best things. Catalyst Bioscience. Yes, this stock did make a move of like 8% in last. See, this is the bounce which has happened. But how many moves like this you see on a daily basis? And I've been doing this for 10, 12 years, so I can tell you very few moves are like that. So focus where the easy money is, which is where the stock has an established momentum. Obviously, this is not a setup which you will buy for the obvious reason it didn't close near the high. And gap ups, I have come to a conclusion that I don't need to focus on gap up to make money. It's like sometimes it works unless there's a catalyst, which is a very good catalyst. Now this is where like, and I said like that high is a subjective, that's the criteria which you can ignore a little bit or give it a more room. Stock still worked, right, and it made. Is this a good breakout? This is a good breakout. See here, 3-4 days sideways and it is breaking out. Okay, I would have liked a more compact kind of a setup, but like this is a IPO tends to be more volatile, so that's nice. But like see here, from this particular thing, 18%, the stock is up in 5 to 10 days. So something like this, like buying something which is going down, anticipating it will move like this, is if you are, that is the kind of setup which you want to focus on. Ask yourself a question: can you find on a weekly basis hundreds of setups like this, or 2 or 3? If you find hundreds of setups which are of the other kind, only 2 or 3 of this kind, the choice is yours. Okay. Now, diamond offshore drilling, I looked at this as a breakout here, but you know it's choppy. It's been choppy. Here was a breakout which didn't work. As against this breakout was part of a small upward move, and then continuation, and then like this move made a 14%, 15% in 6-7 days. And remember, this is a large stock, probably it's reasonably large, not very large, but like so study 8 to 20%, 40% kind of moves here, like, and this is consolidation, choppy consolidation. The stock has a history of choppiness. So if I trade something like this, I have to know that my stops will be wider. So you always have a choice whether to buy something like this and give it a wider stop, or like stay away from it. But like still, the stock still worked for making a move up around 6% from that breakout. Okay. Here is a very good example of 3 Lynch again, like see here, like, and see this will not meet like your 3%, the 4% breakout criteria, but it will be in the low threshold breakout. And stock didn't had in the immediate future here, there was 4% breakdown, but after that the market recovered and it didn't had much of a pullback. It was like shallow pullback, and stock made a move. So between 4% and this low threshold, you should be able to find most of these stocks. Now, as we keep going down, okay, we still not reached a level where like we are getting into less than 8%. So this is something like this doesn't show up in any of your scan before it made a move, because it didn't have the threshold of dollar move also. Now again, like this is the kind of things which a lot of people are very excited about buying things which are like reversals, but I don't see many of these kind of setups. Okay, so another reversal kind of candidate. More continuation setups work better in swing trading. That's what I would say if you're trading momentum kind of moves. Means if you're looking for explosive moves happening. Now all these stocks, they are like in a choppy. It's always like better to have a very orderly moves and buy from orderly moves than to buy something which is so choppy. Okay. And that you can see from the study, not based on like anything which I say. Now this is very, very orderly move. In here, this will show up in your low threshold breakout, and that's the reason why I created the low threshold breakout. And I didn't have to position in this, but like say from that low threshold breakout, it still made 12% move, and it's setting up very nicely. Okay. See, these are some of the reversal kind of setups which people like, the stock which goes down. And then it reverses, but here again there was a transition period, in the sense it didn't like, and if you bought this, it didn't work, but like, if you gave it some time and then it transitioned, the trend transition, it worked, but not something which you find very common, is what I'll say you. PE again, like, see, very choppy, something which is choppy. You don't want to be even going into a volatility. There is like a choice, as I said earlier also. If you look at here, 2 towns, one is called a volatility city and one is like linear city. In the volatility city, there are knife fights every day. There are like drugs being sold on every corner. There are prostitutes on corners. There's a lot of police cars coming and going, and random guy running after some random guy with a knife. That's a volatility city. Okay, this is volatility city. Okay, as against that, you have a choice of going for something which is very, very linear. Let's see if you find something which is very linear, or when the phase of the stock is linear, and if you focus on, like, say this is linear, right, and the stock is making orderly moves. Okay, there was like but it just kept on going sideways, and we bought it, and it worked, right, and it means it had a follow through. Obviously, the trade is still on. So look for something which is linear, non-volatile. Leave the volatility trading to people who like thrills in life. They want like large drawdowns. They are up 60% for a year, then they end up giving up 20% of that, and then again go up, or they are up triple digit and then they lose all their money and then again go up. That's volatility is not what I'm looking for. I'm looking for a very orderly move. Like this is a setup. Does it meet 3 Lynch criteria here? Not up 3 days in a row. Okay, that's the first criteria, and that's the sacrosanct criteria. Okay, if you want to make money on then linearity of prior move. Okay, this had like a prior move was fairly linear. There were no pullbacks and all. Okay, what is the next thing? Young trend. Yeah, it was a young trend. Relative. It's like if this is dark green, it's young. Okay. Then no more than 4% breakdown. There is no 4% breakdown in this consolidation. Okay. Consolidation pullback is shallow, orderly and compact with narrow range bar and low volume. So that if you see here, volume was low during this consolidation and the stock had a breakout, and then it followed through and it made a move of around 14% in 8 or 9 days. Okay, so that's what we look for. And then I have in sweep. See, sometimes like when you get a big move like this, the next day a lot of move happens in one day itself. So this is why you have to get into. I wouldn't have taken a setup like this anyway because it was like choppy. But you have to get into them very soon, early in the morning. If you get in, then you can capture larger part of the move basically. Now again, this is a reversal kind of a setup, but again, it's a transition. There is a transition, like in the sense, if you bought this, you didn't make much of a money, but like it had some time. This is a double bottom kind of a setup, basically at the top of the range. So that's more likely to work. 4%. You can buy setups like this also, but they are not very common, is what I'm telling you. They happen in certain market conditions. Now this is a gap up and a pullback and then reversal. These are also setups. Sometimes they work, but like not very common. I'm interested in something which you can easily find and where you can easily make money, rather than something which is something like this is a buyout. Okay, so I put in those XXX symbol when there is a buyout. BPT, this is a breakout. Wasn't really a best of the trend because of the choppiness, so not something which I would go for. Now this is the example of what I said, volatility city and non-volatility city. This is non-volatility city, and this is where you can like make your living, just like finding very low threshold breakouts in this kind of orderly trends and trading them and get them in, or do anticipation on this kind of setup, rather than doing anticipation on reversals and stuff like that. If you just focus on stocks which are very linear, and just like enter on anticipation or low threshold, you can make a living. Okay, very orderly. And see now, but this is where like the more it goes extended, the less is the probability of it working. The younger the trend, better it is. Like, did it meet your criteria here of linearity, and it made a move of 73%. Here this breakout didn't work really, because you would have got stopped out. This breakout worked, it made a move and it continued to make a move. So always study stocks which make big moves. They will have linearity. Okay, that's based on study of hundreds of these. The more choppy kind of stocks didn't close near the high. It did at some stage, it would have met, but like there was a 4% breakdown also. So it's overall the stock is choppy. Okay. CVNA. Okay, here there was a 4% breakout, and from there it made a move of around 63%. Okay, now it's just chop city. Okay, here again it made a move. Did it meet 4% your 3 Lynch criteria when it made a move? FW1K again, like a stock did make a move here. Okay. This will be like 1 day move itself is 12.66%. So VRS, see again, like if you get a move which is a longer term move like this, this stock has been like in a very orderly moves here. Like this was a nice setup, but like it's been in a range bound. There's a pullback. Now this kind of shallow pullback, if you buy, I understand, because these are like in the range itself. Like you look at the overall context of this stock, and buying something like this as a shallow pullback where the trend intensity of 105, the stock is also not really broken the trend. I'm all for that kind of setup. I'm not for a setup where things have like really fallen down and people buy those beaten down stocks, because I just, not that I'm not for it, in the sense they just don't work based on study of 8% moves which I've seen for many years, in my opinion, based on the things which I look at. Okay, see, this is something which I would not look at. So sometimes like these things are choppy. See, you had a 4% breakout, didn't really, next day it went up like around 2% really. But again, you wouldn't really buy something like this because it was in a reversal kind of a mode. Okay. Again, many of these. Now this will be a 1 day move of 8% itself, it had a breakout. Okay. Origin, again, very choppy. I'm not going into any city where there is like a lot of volatility. That's just not my destination. Okay, this is a reversal, but again, like, and here if you're trying to play reversal, there was a transition period, like, there was a transition and then it started moving, but they are not very common. As you can see for yourself, you look, and you will find less than 10% of the breakouts are like that. This is 1 day move also, and this is something which we played, right? And we played very nicely. Even for a dollar breakout, it's exactly the same thing you look for. You look for like an orderliness. This is where we bought it, right? And it worked, and that was a good move. For risking dollars, $2, you can make like, and I say in dollar breakouts you have to look at how much dollar. So that's around $8 or $5, $6 in 3 or 5 days, and that's the kind of moves which you want to look at. Now this is a reversal kind of setup, which is very people want to play those. Not very common. Again, another reversal kind of setup. But again, many of the good reversal kind of setups will start with the 4% breakout. So a simple idea like 4% breakout, which can make you a lot of money if you know how to use it. CBM. This is a dollar breakout, like basically a dollar breakout. Again, dollar breakout. I've seen that, look, and momentum is not so important for a dollar breakout, as long as the context of the setup here, like there was a narrow range day. Even this, no, this was a dollar breakout actually, 95 cents. If you look at dollar breakout, it must be, yeah, this is a dollar breakout. See here on this day. Okay, and as for a dollar breakout, this was up 95 cents, and the stock has made in 5 days $3. So for risking 95 cents, if you can make $3, will you take that kind of a trade? As long as the context is good, like for a dollar breakout, just look at like something which has a good context. Okay, most of these must be dollar breakouts, I am assuming, because we are going towards like yeah, we must be like approaching now dollar, not dollar breakout. These are still like so General Electric. This is another reversal kind of setup, unless you played it right, in the sense the next day when it was up lot. And this is a very large stock, 8.6 billion, and unless you got out of that, you would not have made money on that move, because if you started dreaming about like it will double and not triple, it doesn't work that way. Again, like in a stock, 4% breakout, and in 2 or 3 days it will make 6 or 7% move. Obviously choppy, inside tray. Same way, Unit Corporation, oil and gas, but it's choppy. See, you have to look at the context of a breakout sometimes, like go on a larger time frame to see how it is, but I wouldn't take something like this because it's too choppy for me. And these are all chop city. I will leave the chop nature stock to others. Taco, this is a nice setup. See here, this is nice, hasn't really had much of a follow through, and the market was falling apart when this stock had this breakout. So that's how things are. Again, like this is a reversal kind of things, not the kind of setup which I trade. Okay, FRPT, again, if you see fresh pet, like see, very orderly. This is the kind of stocks which you should be focusing on. If you don't do anything and just focus on stocks like this and trade them which have linearity, just focus on stocks with linearity. Here, like it had a lot of linearity and it has made a move. Now this is a IPO, RareX, again choppy. Penn, Virginia, PVAC, this must be a it gapped up $5, so that's like why it is. Now these are all high price stocks. Now these are all like an SA, but again I wouldn't take a dollar breakout also, which is so choppy. Okay, UOG again chop. So if you don't avoid the temptation of getting into something which just looks like a breakout here, wait for a trend to establish, and after a trend is established there are many chances to get into a stock and make money rather than trying to be early. There is no glory in trying to be early. I don't see any reason for doing that unless you want bragging rights. Clorox, now this is a dollar breakout here. See, this is next day it went and made around 350. So but context was right again, narrow range day, and it's a dollar breakout. As I said, momentum is not so critical for it. LIGND, now this has become choppy. It's a range which has formed basically. Yesterday also, day before yesterday it was up and then ended up giving up the gains. So Regeneration Pharma, now this is a reversal kind of a setup, which is basically on higher price stocks. You can look at something like this, it still can work. These are all higher price stocks. So this is gap up, this is chop city. Okay, now this is complete chop. I don't go into these kind of volatility cities. Okay, now this is an example of a dollar breakout which has worked. It didn't close near the high, that is the negative on this. This is a rate, it is not really a very fast moving, but still as a dollar breakout you can still play them. This was a $11 move. I didn't really play this one. So Sherman-Williams, Equinox, these are all choppy. They are dollar breakouts basically. SAM, now this is a example of a very linear setup, and this is where if you really focus on linear setups, if you really take away all the noise from the market and just identify 50, 60 very linear stocks like this, and just keep entering them on any breakout or on any low threshold moves, you can make a lot of money. Okay, and one of the reason why I created that low threshold breakout kind of scan was for that reason. So here we looked at all these stocks, and it took us 1 hour, but in reality for me it's a 5 minutes exercise. It doesn't take more than to explain. I showed you all these, but I am primarily interested in non-chop city, in the sense if I had to identify from this list the kind of stocks which you want to be focusing on all the time, or the kind of setups is like this, very orderliness. Okay, there are a lot of these kind of setups when the market starts making a move. If you even this is relatively very linear kind of a setup. Okay, so study the very linear kind of setup and just study the very choppy one and then make a decision. This is very linear setup. That's the kind of examples which I want to be in basically when there is linearity, and leave the choppiness. This is linear, okay, it went sideways but it's very linear, and that's what I want to be focusing on. And if you do that a good job of just focusing on linear moves, you'll find many of them. So this is the bullish side. Same way you can study the bearish side. Most of the days you're not going to get many on the bearish side. Now this is a extraordinary period in the sense you're getting 384 stocks. Most of the time you're not going to get it, for the simple reason that the market spends more time going up than going down most of the time. So but if you really want to go through this, you can go through this also and study what to look for in a short setup basically. And when you study this, you'll find some interesting things. The weak structure which I've been talking about, stocks which really don't really make too much of more than 3 or 4 days of counter trend moves or the better shorts, you'll see that's one pattern. The other thing is something which is very, very strong is better short than something which was very weak. Something which is very, very weak is more likely to reverse than something which is and the 4% breakdown, again, if the context is right, similar to the what we looked at in 3 Lynch kind of conditions, series of narrow range days, then the stock closes near, and if it is first leg is also down, then that works. So I'm not going to go through all the short setups here as of now, because it will take a lot of time, and it's already becoming a 1 hour kind of a video. But this is what you want to see. This is the kind of setup you want to find. And you will find once you start trading 4% dollar breakout and low threshold, and if you just like religiously only look for all the conditions to be true, 100% of these conditions to be true, you will only find setups like this, and you will only get into those, and it made a 69% move from that. If you just buy the perfect setup, there is money to be made. Okay, so study the 4% moves. Study similarly, like you can study the larger moves, like say this is stocks with at least an liquidity above 100,000, and if you sort this by YTD, and this I do all the time, and I at least study the top 25 stocks to see. You look this is a longer, and again, anything which is going to make a longer term move most likely will have lots of linearity. So if you study, like say this is very linear, right, and you just sit and wait for something like this to break out or buy this is very linear. So anything which is going to make move is going to be more likely to be linear. And if you see most of these stocks which have made moves, and the top 100 stocks which have made largest move in a year till date, okay, and if you study them and if you find that you look none of them have IBD ratings above, say, or only 10% of them have IBD rating above 80 or 70 in terms of the EPS rating. Most of them have negative or no earnings, or they are biotechnology stocks or drug stocks. Then you will know what to do with it. You will focus on things which work rather than sitting there and telling people that you can only scan for stocks with this much earnings and all. See, understand, there are a lot of people who study make money from the IBD kind of method, but most of those people whom I know who have made a lot of money and really lots of money using IBD kind of method, including people like Comito and all, they are not using the IBD criteria of earnings and all. You talk to Comito, what is he doing? He's looking at stocks with relative strength rating above 90, which is momentum indicator. Relative strength is just a momentum indicator, is their proprietary indicator, but you can get the same thing using MDT. It's the momentum which is important if you want to find a bigger move. All that thing which they talk about, all other things, sometimes stock make a move because of earnings, but more stocks make a move because of speculation, because of whatever might be the reason. And very liquid stock can make moves. So it's not these are junk stocks or these are not stocks with enough liquidity. There are stocks with enough liquidity in this thing, but they make a move because of reasons other than the IBD kind of things. So most important to sum up this thing, the most important thing which you need to know is, for any time frame which you are going to be trading, if you are going to be trading intraday moves, every day study a top 100 intraday moves. If you want to be trading the first half an hour, study every day the top 100 or 50 moves which in the first half an hour. And by studying that, you will understand how the market operates in your time frame, because we are interested in that time frame. Okay, if you want to find stocks which double, study every stock which doubles, and from that you create your own scans. The conditions which I created are based on my understanding and study of the momentum burst kind of moves, and those conditions work if you follow those conditions on that kind of a setup. But for another kind of setup, you will need to create another kind of moves. But the most important thing is, don't really listen to anybody, including me. Do your own due diligence, find out what works in the market. The most important thing, if you're not making money, is to find out what works in the market, because if you don't know what works in the market, all the effort, all the scanning, all the software, all the back testing is not going to work for you. Okay, so find out what works in the market on a time frame which you want to trade, and then focus on that time frame. And then over a period of time, if you do this study day every day, you will learn more. Every day you do this and reflect on it, and then you find something, you start okay, how can I scan for this? How can I find it at the right thing? What kind of criteria will allow me to avoid stocks like this, or how can I avoid failed breakouts? Then you'll create your own criteria and once you have the criteria and you become stringent in applying those criteria to taking a trade, not randomly taking trade and over trading and just like buying something based on somebody says PRGS on 5, so all move and buy it on a 5-minute chart. No, you don't need to know all this. You use the exact same setup on a lower time frame of what I said, 3 Lynch, and it still works. Like here, there's a stock which made a move, right? And or say if you look at Tesla yesterday, which I traded, okay, so exactly the same thing. You look for a stock to set up, and then it makes move. See, high price stocks is where the money is if you're doing intraday kind of trading, but the key really is to develop your own expertise, and in order to do expertise, in addition to trading every day, you need to spend some time on developing your market understanding.